Welcome to The Explainer, where we're breaking down the biggest stories that moved the markets in the last 24 hours. Okay, let's get right into it.
You know, earnings season is in full swing, and it has been absolutely brutal. There really is no middle ground. Companies are either getting rewarded and rewarded handsomely for beating expectations, or they're getting severely punished for missing the mark. And boy, the last 24 hours gave us a perfect snapshot of this high-stakes game.
So first up, let's dive into the earnings reports themselves. In this kind of market, the verdict from investors comes in fast and it is decisive. We're going to break down which companies delivered and which ones didn't quite make the grade.
And you can see a really clear split here. On one side, you've got your winners, companies like Lemonade and Duolingo, who posted just massive gains on really strong results. And on the flip side, you've got the losers, like Progressive and Upstart. They're now facing sharp drops and a whole lot of analyst downgrades. Let's start with the good news, shall we?
Okay, let's kick things off with the biggest winner of the day, Lemonade. I mean, look at that number. The market's reaction to their earnings was nothing short of explosive. The stock soared over 34% in a single day, hitting a new 52-week high. So, what on earth caused this incredible surge?
Well, here's the why. And what's so interesting is that it shows the power of just exceeding expectations. See, Lemonade is still technically losing money. But, and this is the crucial part, they lost way less than anyone predicted. Wall Street was expecting a loss of 72 cents a share. They came in at just 51 cents. Even better, they raised their future guidance, which is basically them signaling to the market that they see much smoother sailing ahead.
Another huge winner was Duolingo. And their story wasn't just about the numbers on a spreadsheet, it was all about explosive growth in their user base. They blew past 50 million daily active users. That is the engine that drives their entire business, and as this quote says, that engine is firing on all cylinders.
And this just brilliantly illustrates the sheer scale of their success. I mean, look at that earnings per share number. Analysts were hoping for maybe 76 cents. Duolingo delivered an incredible $5.95. That's not just a beat, that is an absolute grand slam. All driven by that massive user growth and a 41% jump in revenue year over year. Just wow.
All right, but let's flip the coin over, because for every big winner, there was a loser, and the market was just as quick to pass judgment on them. First up is the insurer Progressive, who, well, came up short on both of the market's key metrics. They missed on earnings per share by about 60 cents, and they also fell short on revenue. In a market this sensitive, a double miss like that is just a recipe for a sell-off.
Now, Upstart's situation is a little more complicated. They actually beat their earnings per share estimate, which is normally a good thing, but they missed on revenue. And in this environment, that one miss triggered a domino effect of negativity from Wall Street analysts.
And this is exactly what that domino effect looks like in practice. In the hours right after their report, major investment banks started coming out one after another, just slashing their price targets. You've got Needham, Morgan Stanley, Bank of America. It's like a wall of downgrades that puts immense pressure on the stock going forward.
Okay, so the market's big moves weren't just about earnings reports. Actually, the single biggest corporate story of the day came from a kind of quiet filing that reveals a huge strategic power play by one of the biggest names in media.
So which company just made a massive chess move in the ongoing streaming wars?
The answer is Disney. In a move that really formalizes their control over the sports-focused streaming service, Disney has officially taken a controlling stake in FuboTV.
And we are not talking about a small investment here. The filing revealed that Disney, through its subsidiary Hulu, now effectively controls 70% of FuboTV's voting stock. This is a major consolidation of power in the streaming world.
So how did this all come out? Well, it was in something called a Schedule 13D filing. And you should note, this isn't just some passive investment disclosure. A 13D filing is required when an investor takes a huge stake with the intent to actively influence the company. So what's the key takeaway? Disney just told the world, we are in the driver's seat at Fubo.
Of course, earnings weren't the only thing moving the market. A couple of other big names were making headlines for some very different reasons.
First, let's look at Coinbase, which is really getting hit from two different directions. On the market front, Bitcoin's price dipped below a key support level, which almost always puts pressure on crypto-related stocks. But maybe more importantly, on the regulatory front, a group of U.S. banks is now actively lobbying against Coinbase's application for a national trust charter. That just adds another big layer of uncertainty.
But it wasn't all bad news out there. The online furniture retailer Wayfair actually made a really smart financial move. First, they secured $700 million in new funding through a bond offering, which helps them manage their debt. And this proactive step was immediately recognized by S&P Global, who upgraded their credit outlook to positive, and that's a huge vote of confidence.
So, that's what's been happening over the last 24 hours. But what's coming up next? Because the earnings action is far from over. We've got several key reports due after the bell today.
All eyes are going to be on Block, the company behind Square and Cash App. These are the numbers to watch. The market is expecting revenue right around $6.34 billion and earnings of 63 cents per share. We'll definitely be watching to see how the growth in their Square and Cash App businesses holds up.
And Block isn't the only one. We've also got a whole slate of other interesting companies reporting, from real estate tech firms like Opendoor and eXp World to digital health companies like LifeMD and Doximity. It is absolutely going to be another busy evening.
So the big question really remains, after seeing such a clear divide between the winners and the losers today, what will tonight bring? Are we going to see more of the same all-or-nothing action, or are we in for one last market-moving surprise? We will be watching. Thanks for joining this explainer.